Hi traders, it's Roberto. This is the tutorial on directional bias using top-down analysis and how to be able to figure out what is the overall direction of the market and what time frame you should be looking to get in a trade. So we're going to combine the FX advisory indicator with a 20 moving average line looking at daily, 4-hour, and 1-hour chart. So a few things I look for. Number one, I look at the MACD indicator. We're looking at Euro Yen, and if you notice, on April 20th, on a daily chart, price broke above the 20 moving average line. So that's basically what we knew, that the market, this currency pair, was not in a downtrend any longer. Okay. If you focus on smaller time frames, let me just point this out. If you are consistently looking at a 1-hour chart in lower time frames, you will never be able to trade Forex, and I'll tell you why. Because you're looking for small profits, more gains, and you're missing out on the most important aspect of trading, and that's what trading in the direction of the daily chart. And trading like institutional traders, because institutional traders do not look at small time frames. So if you're sitting in front of your screen and you're trying to figure out if you should take a trade based on the 1-hour chart, you do not have enough information. You have about 40% information on how to trade, how to take that trade. If you look at a daily chart, if you just took this trade back on April 23rd, based on just a daily chart, not even looking at a smaller time frame, and stayed in this trade for 2 weeks, you would be up over 600 pips. This is difficult for new traders, extremely difficult for new traders. So my job is to help you get over the fear of trading on higher time frames, because the reality is when markets take a direction, and you see that on a daily chart, it could last for weeks if not months at a time. And so far, for the past 2 months, the Euro Yen has been in an uptrend. You're not going to see this on a 1-hour chart. So what I do on a daily basis is I look at the daily chart, and I notice here, back on April 19th, we had a trendline break. The market gapped up based on France elections. So just using just simple trend lines on a daily chart, I can see that this downtrend that started back in March was pretty much over, because we had a trend line break on a daily chart. 2 lines in MACD are crossing to the upside, and notice that they stayed angled and separated going up on a daily chart. Okay, this is crucial. This is important. If you cannot read a daily chart, then you're in trouble. Okay, it's difficult to trade Forex unless you understand the overall direction of the market. And right now, the Euro Yen is in an uptrend. So I look at my daily chart, I scroll down to the 1-hour chart, and I start looking for buying opportunities. Now on the 1-hour chart, the market is all over the place, right? Market, Euro Yen rallies, it sells off, it rallies, it sells off. You don't know where the market is going on a 1-hour chart. You have no clue. Okay, so if you're looking at a 1-hour chart every day, then you're going to miss out on these opportunity, understanding that even though the market here, this is a great example where the market Euro Yen sold off for what, 100 pips, and as a new trader, you're looking to sell based on the 1-hour chart, when if you go back to the daily chart, we're in an uptrend, right? Market's clearly in an uptrend. Price is above the 20 moving average line. Let's throw in Ichimoku indicator. See if I don't even have it here. 1 second. Let me just add Ichimoku. For those of you that are using Ichimoku indicator, price is above the Ichimoku cloud. Okay. It is a lagging indicator, and I would have taken this trade even before it broke above the cloud based on this trend line and based on MACD indicator. Okay, so let me just remove the cloud. We know we're in an uptrend on the daily chart. Let's look at the Ichimoku on the 4-hour. Again, price is above the cloud. Let's look at the 1-hour chart. And you see the difference? On the 1-hour chart, price broke below the cloud, went above the cloud. So this is not reliable. 1-hour chart is not reliable for directional bias. It's not going to help you. It only is valuable for entries. And if I were to take a trade on Euro Yen, I would wait till price breaks above the cloud because it's in the direction of the daily chart and the 4-hour chart. Okay, so it's just as simple as that. And if you're not trading like this, looking at a daily chart and then scrolling down to the 1-hour chart for your entry, then it's going to be very difficult to trade Forex and you'll have a short-lived career. Right? So the first thing you need to do is look at a daily chart. What is the direction on a daily chart? We're in an uptrend. Okay, it's clearly going up. Price broke a major resistance level. The body of the candle on a daily chart broke a major resistance level back from December. So clearly this is going to keep going up. So what do? We go on the 1-hour chart and we wait for pullbacks. Right now, this is the 24-hour. Let me just put this right here. This was today's move, okay? And you could have easily taken this trade if you would have known that the daily chart was in an uptrend. All you needed to do was take this trade during the Asian session and put your stop loss below the swing low, okay? And look how many pips the market put in, 120 pips. Now, the market's going to retrace because that's what it always does after a day of rally. So this is where the advisory indicator comes in really handy. So right now we have advisory indicator giving us a buy signal down at 124.45, which is a previous resistance turned support. So if Euro Yen comes back down to this level and it gives me a candlestick pattern buy, then I would take that trade. Technically, this is a sound trade because if you look at the previous week, this level of resistance, look how many times price on the 1-hour chart kept bouncing off that level of resistance and retreating. Finally, it broke that level. So this level is not resistance any longer. It is a support level. Now, if you look on a daily chart, the daily chart doesn't care about that, okay? The daily chart just shows an uptrend. So anytime it sells off, it's just going to go back up again. So the daily chart is much more important than a 1-hour chart. But if you trade off the 1-hour chart, you'll have no idea what to do, what direction you should take a trade. Yes, you can take short trades to the downside against the overall direction of the market, and you'll make money on these trades. But if you stayed in too long, look what happens. It's just turned around and went back up. And if you enter the trade up here, and don't get me wrong, I do take these trades. These are counter trend trades based on candlestick patterns, previous resistance level. This is a good trade, but you have to get out of these trades because you're going against the ebb and flow of the market. Okay, there was even negative divergence on the 1-hour chart. So it sold off, but notice it didn't move very far because why? This divergence did not work out that well, and it went down about 100 pips, but because we're going against the trend, the daily chart, this was short-lived. Now look at the divergence on this particular trade here. divergence here. We have swing points, right, going lower. And we have wave patterns on MACD going higher. Now this divergence setup, positive divergence, worked out quite well because why? It's divergence supporting the daily chart. Okay, so the entry's up here after a trend line break and went up, what, 113 pips so far, and it's not finished. Okay, so please, if you are having a difficult time trading, it's simply because you're not doing your analysis correctly. Okay, and it causes a lot of problems, a lot of bad habits get developed. If you have a string of losses, then it causes a lot of fear in the markets. You're not going to be able to trade. Also, if you sit in front of your computer hours at a time, all you're going to do is get tired and misread the market. You're not going to be alert enough to be able to analyze the markets effectively, correctly. So again, let's do this over again. You need to look at a daily chart. I like using the 20 moving average line because it's just a simple line. Okay, when price is above the 20 moving average line, we're in an uptrend. When price is below the 20 moving average line, we're in a downtrend. Okay, and that's on a daily chart. I'm not talking about a 1 hour chart or even a 4 hour chart. So if I know price is above the 20 moving average line on a daily chart, then I would look and see if that's the same thing on the 4 hour chart. And it was today. Okay, price broke below. It was above the moving average line on the 4 hour chart for quite some time, and then what happened? It turned around, gave us this retracement. Okay, but then it turned around and started resuming its trend. Okay, today, this happened today, in the direction of the trend. Okay, so it's going to be difficult to be able to take these types of trades because you're not paying attention to the overall direction of the market. This signaled taking a trade in the direction of the daily chart, and it went up for 4, 8, 16, 24 hours. Okay. And I would enter the trade on the 1 hour chart. Okay. So please, if you have any questions, please email me, but this is what we're going to be doing from here on in, because I've been getting too many emails from people that are very confused as to how to trade Forex. And this is a very simple, straightforward way of analyzing markets. If you're not looking at all time frames and you're only looking and placing trades based on the hourly chart, you're not going to be able to make money in Forex. I hate to put it that way, but you will be more confused than anything if you're using one time frame. So I welcome feedback on this, but again, make sure that when you trade Forex, that you are looking at everything, every angle, every time frame. Make sure that everything lines up. Otherwise, you're just prone to mistakes, okay? And I've done it in the past. I've known many people that do it. They look at a time frame, maybe a 15-minute chart, which is the most dangerous time frame to trade, because it's not telling you anything. A 15-minute chart is too much noise. Stay away from the 15-minute chart. If you want to scalp for 5, 10 pips, no problem, then do that. But if you want to be making 100 and 150 pips a day, you cannot be looking at a small time frame. Okay. I'll be back in the trade room tomorrow at 7:30 a.m. Eastern. And thanks for watching this video. I'll talk to everyone tomorrow.